Hey everyone, it's Nick with Us vs. Herd. Thanks so much for watching this video. If this is your first time here, please hit that subscribe button. And if you're not yet a member of our free options trading group, I actually had the link below here in the description. And what I thought to do today is because S&P's, all the markets are hitting, the S&P hit an all new all-time high today here. You know, SPY just hit 287.67. It's been hitting all new highs every day. I thought I'd do a video on a short call vertical spread. So I'm going to go over that in Robinhood. Today I'm down a little bit on the account, but I'm still, not too worried about it. Still up almost 40% for the year. So just taking a little dip today. So I thought today would be a good day to show you how to put on a vertical call spread on Robinhood. And I'm going to use SPY. Reason why I like SPY is it's really liquid, and they have really tight markets, and they have a lot of expiration dates, and it tracks the S&P 500. So if you're tracking the indices, this is what you want to trade here. And I actually don't have a ton of buying power right now in my account because I have a lot of open trades. So what I'm going to do is get to it. I'm going to go to trade the SPY options, and as you can see here, I have all the expiration dates. I'm just going to do this for example purposes. It's not to make money. Of course, do your due diligence when putting on a trade. This is just for example purposes, of course. But I figured since the market's up so high today, we'll short it. And what we're going to do here, it's actually really the same on mobile. I do like the web version better for putting on legs because it's a little less, you can see it a lot better. It's a little bit less cumbersome. But what you're going to want to do here is you're going to sell something closer to in the money. So sell a call, you'll select sell something closer to in the money, and then buy something further out. So depending on how much risk you want to take on the trade is how you're going to want to do it. For me, I'm just going to do something really tight. I'm just going to do something 50 cent wide, and I'm just going to straddle this in the money. So I'm going to sell this 287.50, which is in the money. I'm just going to buy this 288 call that's just right outside the money here. Oops. And as you can see here, I'll get a 26-cent credit for this trade if it goes my way by August 27th. Should maybe just do a little bit further out, actually. Maybe we'll do the 31st just because. Let's do that. Let's do that. Oh, they don't have great options there. Here we go. So we'll do something like this. Let's put that trade on again. So I'm just going to sell something in the money here for $1.09. Buy the one at 288 here for 28-cent credit. So it'll say, if you'll know you did it right if it says call credit spread. Now, if you're on mobile, in the upper right-hand corner, you're going to want to hit select first before selecting your legs, but the rest of it is the same. So if you're on mobile, in the right-hand corner up here, there's something say select, hit select, and then go through the same process. So what I did, just to kind of recap, I sold the one closer to in the money, the more expensive one, and I bought the one just outside the money, the lesser expensive one. So what I'm just going to do here, I'm going to hit continue. See if we can get a fill. I'm just going to do one contract, and as you can see right here, 26.29. That's automatically give me a mid price of 28. Just so you know, the lowest price is the bid, the highest price is the ask. Robinhood doesn't do a great job of telling you what that is, but just so you know, that's what it is. 26 here. So on the left side is the bid, the right side is the ask, and this is the mid price. For today's purposes, I'm just going to go right in at the bid to get filled, because it's kind of a hassle to cancel and then replace. So I'm just going to hit continue here. I put it in for the bid price, hit review, and I'll just hit submit here. Get that 26 credit. Actually, I got to put my password in. I have MFA set up because someone was trying to hack my account at one point here. So I gotta get the code. So unfortunately, because I haven't authenticated in a while. Okay, so it got filled. As you can see here at the bid, I took a collateral of 50 bucks, and my cost is 26. So what this collateral means is this is actually a one-for-one trade, and what Robinhood doesn't do a great job of is telling you what your max loss is. So my maximum that I can make was that $26 credit, but this is pretty much a one-for-one deal. So I think the most I could lose on this would be like 20, 25 bucks. But they took 50 just because Robinhood's not as liquid as other brokers, and they want to protect their cash. That's why they took double collateral for me to cover the cost of the trade, which I'll get back when I close it out. So I'm not going to close this out right now, but I will show you how to close it out. Let's go to SPY here. Go to my trade here. So it says I have these calls. All you gotta do is go to, put in the one contracts, how many you want, hit review order and submit, and this will close everything out. So that's how you buy. I'm not gonna do it. I'm just gonna leave it on because no point in closing it out just to automatically lose some money, because it's at 28 cents now. Put it on for 26, so I lost a couple cents there. So, the one thing I will say about Robinhood, just be careful with your limit prices. Make sure you put it in there. Not always, you're going to get the best pricing out of Robinhood. It's not as fast. As you can see, I use Thinkorswim. I also use Tastyworks as my main brokers. But that's pretty much how you do a short vertical call spread. If you guys have any questions, leave a comment below. Definitely thanks for watching this. If this video was of value to you, push that like button. Thanks.